Hi everyone. So I am back after hiatus. Sorry, we were supposed to finish this lesson about 2 weeks ago, the last lesson. But hey, I've been so busy, so that's why I'm recording at this weird time. But I thought it's better to try to get it done, and I think in the next classes I'll actually cut it to 3 lessons because I think 6 is a bit long and I get too busy, and next thing leads to something else and so on. So anyway, let's jump into it. So from last time, if you recall, we had looked at the revenue, the direct cost, operating cost, capitalization assumptions, and financing assumptions, including the debt schedule. So now we're going to work on the 3-part financial statements. Actually, firstly, I'm going to finish the depreciation and then start putting together a 3-part financial statement, income statement, balance sheet, and cash flow statement. Then after that, I'll show you how to quickly summarize the model and build an analysis page, which is very nifty, very quickly. Again, the purpose of this exercise is not necessarily to have a very sane model or whatever. The point is just to show you how to do it, and then you can then interpret to say, okay, does this assumption look reasonable? Does this one not look reasonable? Yeah. So this is the model. This is where we left it. Assumptions. We've got our timing. We've got our construction. So to start with the depreciation, we're going to the construction tab. So let me just label it here, depreciation. So I'm just going to reference everything up there, up to there. Oh, the last 3 are not very useful. Delete those. And then depreciation. So depreciation, you need the, is this a depreciable asset? Question mark. So this will result in a yes or no. So 1 for everything which is 1, and then when it's not, it will be a 0. So let's say insurance cost is 0. In reality, I mean, it can be anything. And then lifetime. In this example, we're just going to use years. In fact, maybe let me put the whole 20 years. 20 years. And again, I just go to formatting, I change the number. And by the way, guys, you notice I've got a fancy laptop now. Yes. So the first one, it's actually a not so nice story, but the first one crashed, died, so I was forced to buy a new one. That's why also what contributed to my hiatus. Anyway, yes. So now the first thing we need to do is to, once the construction flag is done, so meaning if the construction is 0, and actually this is supposed to be and the previous period was construction, then what would you like to do? So that means commercial operations has started. I would like to take the sum of whatever's happened in that particular asset, all the cumulative drawdowns up to that point. Just hold on. Up to, where is F4? Exactly. So up to that point, I'd like to add all of them, and when there's nothing, just but whatever the result is, meaning it will add the total which has been drawn down. And what do we want it to do? We want it to divide by the lifetime, and then I lock it across, but divided by oh no, this is actually years, of which the schedule is in months. So I lock that and divide it times 12. Yeah, so 20 times 12, it will be depreciated over that many months, and it will only happen post the the construction. And one of the conditions that we want as well is this must be during operations. Well, is that even necessary? Nah, it's not. Let's see what could go wrong. And then we paste this down, and then I just copy it across. And the sum, we're getting 83,000. So clearly there's something which I got wrong. Yes, and I think I know why. So if I do that, I can see it's holding. Oh yes. So or yes, I think I've got a better way of doing it. Where instead of checking these two, I'll just check if the sum of all the future items are equal to 0. So if the sum, let me remove all this stuff and then just say if the sum of everything up to there, starting, let me just remove, but starting from the first cell, whenever that's equal to 0, then act. So it means it will only activate when there is no more construction flag. So I've just basically said that if from here to that, in fact, I should lock the last one because I want to be able to be flexible when I start. Let me illustrate what I mean so that it's not theoretical. Yes. So in this case, let's see if the sum of V4 to, what would be the problem? If the sum of these things, no, in fact I should lock this one and then I leave this one unlocked. Let's see, does that make a difference? Yes, it made a massive difference. Yes, so if we add all of these, they're coming to 7.9. How much do we expect? The total for this is 20 million. So we know the depreciation should add up at least to something close to, it's only 789. So we know that we're doing it. If the sum of all of this, whenever that's equal to 0, meaning we're now in the period where we're supposed to, oh, silly me. So I'm supposed to lock the beginning and not that. Yes. G8 should be the beginning. G8, yeah, yes. So meaning, so if I go here, if I add all of that, it's coming to 18.7 million, which is fantastic because now I know it's working like a charm. It's working like a charm. Let's see, when I copied it down, it didn't work because, I know why. Because I also need to make sure that this doesn't go down when I copy it down. Notice how it's G4. When I copy it down, it's now oh no, I locked it before, but without locking it, what's causing this? This is line 4. Line 4 is G4, so if I lock that, so if I yes, so I just locked this, the starting, the end is locked, so it's adding from here as it moves on down. As long as whenever there's no longer ones and it's 0, it means there's nothing like construction left. Then it's going to activate depreciation, and it's going to depreciate it on the total drawdown. So it's just adding the cumulative drawdowns that we have, and then that sum, it's going to divide it by the number of months, which is 20 times 12, because this is a monthly schedule. Awesome. So after one formula, we take it, we just copy it across. beautiful. And Control Shift 1 to put the commas, and Alt H9 to remove the commas. Yes, like so. So now we're gonna just have a total. Alt equals gives me the total. Alt HBC gives me a light top border and a dark bottom border. Yes, so now I just want to do our net book value. Yes, net book value. So net book value, this one I'm going to simplify, and I'm going to just do what is it called, total assets at cost, and then then depreciation, or call it cumulative depreciation, and then NBV at the end. So the total assets at cost will be equal to the sum of these things, and I just have to lock the first one, and then the depreciation is the same thing. Let me be lazy, I'll copy that, and then the only difference is I'll copy this down here. Yes, and let me make it negative, and then add the 2 equals the sum of these two, and Alt HBC to make sure I've got a light top border and a thicker bottom border. Then I just copy these across. Now you see it's not fitting properly. So ordinarily you would go here to where is it, guys? When you get used to doing these things with formulas, you don't even know where they are. I press Alt H O, so it's under formatting, and then I is auto fit column. Yes, so now you see this auto fit. I think I messed up the starts. Yes, I messed up the starts because there's zeros. So anyway, let me just adjust those manually. Awesome. So yeah, the NBV now is calculating properly. Let's just see if we do a graph. Do we see anything crazy? Nothing crazy. Awesome. So now we know we've finished our fixed assets. Beautiful. So the next thing is the financial statements. Yay, exciting. So we just create a copy of that, and then create a copy, and we'll call this financial statements. So the financial statements, the first thing is this is, I just take this, I copy this to the end. So financial statements will start off, let me just remove everything else. I just use the same format because it's so much easier. So we start with the income statement. So the income statement, the income statement, let me remove this. So income statement, we know we've got our revenue, but we don't need to do it again because we've done it before. If we just go to our revenue and operations, where is it? Revenue. So this is the amount we want. So we say revenue, and then we've got bulk, and then we've got retail. And then after that, I think we will have total revenue. And then we will, maybe let me just indent this so that it's easy to read. And then we'll have less direct costs. Maybe I'll put that in italics. And then, so for the bulk revenue, if I go here in the first month, there's the bulk revenue and the retail. So what I just did there is, if you press the alt, the control key, and the back, this item, this back one, if you press it, hold control and press it, you jump to the source, and then to go back you just press Ctrl G. It will already have the place where you came from, and then you just press enter. Fancy trick, but yeah. Wait a minute, and then Alt equals the sum of these two, yes, and then Alt HBP to just put the top border. And then I have no idea why I was pasting it in there, but anyway, I pasted it in the first cell. This is the first cell, yes it is. And then direct cost, and we can reference the direct cost that we have here, and we put them somewhere there. Let me see, let me gamble. This is in D, so if I copy it in here, it should also reference the files at the source, exactly. So yeah, now I have my direct costs. Then maybe let me just copy this formatting. Yeah, and then I'll put this border of the top and Alt equals to put the sorry guys, someone had just disturbed me asking questions about why I am awake. Anyway, actually they're not asking that, they were just, yeah, I think they were just wondering who I was speaking to. I was speaking to you guys. So anyway, so after this we'll put our gross profit, and the gross profit will be a function of the revenue and the direct costs, exactly. So then I'll just put a top border for that. Then after that we'll say less operating costs, and so the operating costs, we know we've got admin costs and we've got employment costs, and then if we copy these two, I think if I press it here, and this should give me exactly the first cell. Again, we can just format it by pasting on top that formatting. So this is the total cost, BP, exactly. In fact, I think to be more logical, I should put, no, it's fine, it's fine. So this is the total costs, total operating costs, actually, operating costs. And then I just indent this inside so that it's easy to visualize. Yeah. Then after that we'll have our depreciation, EBITDA, yes. So earnings before interest, depreciation and amortization would then become a function of that gross profit minus the operating costs. And these operating costs, let me just make sure that they've got a negative sign. Then after we've got EBITDA, we're going to remove the depreciation. So we have less depreciation, and then depreciation. So now depreciation, now we're going to sum, but we only want things which are within this dead range. So what we can do is we can just say sum if this day is greater or equal to these days, F4, then would like you to pick the depreciation, F4. But this picks all the depreciation which is greater, so which means we have to remove it means we have to remove what's because this formula is going to make sure that as long as the date of that particular reporting period is greater than any of these dates where the depreciation is being scheduled monthly, it will be included. However, if it means that if we move to a greater year, it will also include the depreciation which has already been accounted for in the previous years. So we have to subtract what we have accounted for before. So subtract the sum of the previous period, and I'll just lock that and Control Shift Enter. So moment of truth, if I drag this across, ooh, am I fine? Am I not fine? I think I'm fine. And then let me move this to the end, I should come up with 27022 of which, if I go back here, if I add all my depreciation, 27,22249. So yes, that formula is doing its thing. So proud of that formula. And paste, and yeah, I just pasted the formatting. Then after we've got our depreciation, we've got to have our what? Our earnings before interest, EBIT. So EBIT will become, let me just put a top border there. EBIT will just become the sum of these two, of which the depreciation is actually a negative. Yes, and then after that we'll need to remove our interest, and interest again, we use the same method where we'll sum if this day is greater or equal to, we go to our funding dates, because our funding is being done monthly, and then we select if our reporting day is greater than any of those days, would like you to take the interest. Where's interest? Oh, there is interest. There is interest sitting quietly there. So F4 and close that, and then again we want to be able to remove everything that we've accounted for already. So we'll just add something cumulative, and yeah, and this is a Control Shift Enter. Hold on, what happened? Let's see. Oh, silly me, very silly me. I selected the dates. I think I know what I did. Yeah, just bear with me. I didn't select the proper row with the dates, of which it's supposed to be. This is row 3. I think it's 3. In the funding column, that's the row which has the dates. Is it 3? Let me just go to funding. So row 3. Yes, period end is row 3. So yeah, then and we just paste the formulas. Yes, and now this I need to just make sure that this is within an open bracket, and let's just make sure that the result is going to be negative. Then I think I might have let me see. Anyway, so after this we have EBIT's earnings before tax, and then after that we have less taxation, and then we'll put taxation maybe at 30%. Then after that we have the earnings after tax. So the sum of these two, and then whenever this is positive, or in fact that's multiplied by 30%, but it also has, this also has to be greater than 0. So meaning I just assumed we're not going to get a tax credit, but when we make money, when we lose money, we're not going to get a tax credit, but when we make money, we will pay tax. So yeah, and again, let me just format this, and if I now add these two, we should have our profit after tax. So yes, moment of truth. Wish me luck, guys. I'm going in where we add everything to the end. Yes, up to somewhere there. That's a terrible sign. I've got $1 billion. So something obviously went wonky somewhere, but should be easy to fix. Sure, we can find what went wonky. And the revenue, so everything here seems like it's going gracefully. And the admin cost, this as well seems like it's going, yes, this is what's going crazy, the depreciation. And why is the depreciation going crazy? Because, oh yes, I know why the depreciation is going crazy. Because of this negative sign. Let's do something and let's see what happens. Ooh, I see what's happening. I've got a neat trick. Check this out. I delete everything. This is really cool actually. It's a better way of, it's a cleaner way. So we just go to the depreciation tab. Where's the depreciation funding? And then depreciation is actually under construction, sorry. Basically, I just want to have a cumulative where I say at specific dates, reporting days. At these dates, I can put markers, and on those markers, I'll add the depreciation and then just pull it out, meaning it will become easier. So let me show you what I mean. Let me just say reporting period. No, sorry, I'm on construction. I'm supposed to be here. I'll call it reporting period flag. And basically all it's doing is just saying is it a number? If I match this number into any of the reporting periods, these ones, F4, and I say I want an exact, so is number returns a true or false, and then match, I'm saying I want that date. Can I find it in here? So as long as that date is found, it will return a true or false. So, or if I spread it across, notice it will return true here because 31 December can be found, but that one can't be found. So to change them from true false, if I just put a double negative before, minus minus, it will change it to a 1 or 0. Awesome. So now all we've got to do is, it's easy. So we just say reported depreciation, and now we're just going to say if this is a 1, I don't even need to say is equal to 1, because if it's 0 it will return false, if it's 1 it will. So but anyway, to make it simple, if that's 1, meaning it's a reporting period, what would we like it to do? Would like to sum, but we want a range, so we use a special formula called offset. So where we're starting from wherever that specific period's depreciation is, but we would like to take I've just been putting commas because we don't need a row, we don't need a column, we just need a width of minus 6, because we're going to be doing in half years, minus 6. So this specific formula will just return this minus 6. So let me just see if everything, so if it's a false, just put a 0. So when it hits 1 here, it's supposed to activate. So it's not activating because, so if it's 1, so sum, oh yes, because depreciation has not yet started. Maybe let me go to a period where it starts. Yes, and we can test it out. So this is a reporting period, and this reporting period, it's supposed to take, let's just say F9. I highlight everything and I press F9. So it's taking 0, 0, 0, and then It's starting at 930, 92,000. So it's taking this one, and this one. So there should be three of them. 1, 2, 3. So if I just copy to the end, again I must get the same sum as all the depreciation, which is 2722,248. Is it the same? 2722,249. Perfect. Awesome. Then I just put the commas. So this way now, instead of having a sophisticated formula of picking the depreciation, we could literally just look for the date. VLOOKUP, remember VLOOKUP, the very simple VLOOKUP? It comes in very handy here. So equals, we know it's going to be negative, and we say HLOOKUP. What would we like to look up? In fact, HLOOKUP, that's way more complicated. Let's just use index. So equals minus and index, and we'll go to construction, and then we'll take the reported depreciation, F4, and would like to match that particular period end with what? With these period ends, and I want it to be exact, and enter. It's saying it can't find. Why can't it find? What could be wrong? Index match. Oh, this is my problem. Notice how it says lookup array. For some reason I put up one value, because an array, it's the way it's looking up this particular date is in these dates, F4, all of them. Enter. Yes. So now if I copy this across, it will work up to the point it's not working because these dates are out of scope. So maybe I can just put a fail safe, a catch net. So say if we experience an error, I would like you to just put a 0. Beautiful. So now this is nice, and we're gonna do the same logic that we did in the interest. So what we do is we just copy the formula that we used here to flag a reporting period. So I just copied that formula, and then we just go to the funding tab, and at the bottom in the first cell I'll just paste that. Basically that should still return us whenever it's a reporting period, it's 1. So we did the formula once. So let me just say interest summary, and then I use the same formula which I used here, where I said I just copy it and I paste it in funding just below. But of course it's now saying whenever this is a 1, take the sum, but the range it's taking is just specific to the interest. So we'll go to the interest place, and when we copy this across, everything should work like magic. You see, like this amount. So here it should take these 2. Yes, it's taking these 2. You can see the 675. So exciting. Oh, let me label things properly. So this is maybe the heading should be here, and then this should be the reporting flag. Then this is the total interest payable in reporting period. Beautiful. Now we'll go to yes. So it means for interest, again it's the same thing, where we'll say index would like it to be negative, or in fact again that if error thing. So the first thing is just to check the index. Where do we want to check? We want to check the funding, and we want, this is our array F4, and then we would like to match that particular day. Where do we want to compare it against? We want to compare these end periods, F4, and put a 0 and close the parenthesis, and if there is an error just put a 0. Beautiful. Ooh, yes. Awesome, 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 awesome. So now we've fixed everything. The only thing that's left obviously is the taxation. And taxation is positive because we just need to just make it a negative tax. Yes. So awesome. So we're making so much money. Look at all this money. Of course, in reality, you have to sense check these numbers so that you're not delusional. Yes, so awesome. So we're done with our income statement. So the next thing is our statement of financial position, which is a balance sheet. Balance sheet. And then the balance sheet, we know we've got fixed assets, or we'll call them non-current assets, sorry. Non-current assets, and this is supposed to be at the bottom. Remember, we've got our NBV, and we can just index. We're looking for that day amongst, where's the NBV? Yes, construction index. In fact, no, index, I made a mistake, because the first thing in the index is actually the information we're looking for, so which means we're looking for NBV F4. I would like to match our the date of that particular reporting period with the dates in these in the model for the construction F4, and basically it's giving us what's the value. So again, if there's an error, what would we like to do? Would like to do nothing. Just put a 0. Yes, awesome. So we've got all the asset dates. Let's just make sure that the formatting is consistent, because formatting needs to be consistent. Yes, awesome. So to just check whether we haven't made a mistake, I'm in 31 December 2023, the balance 2722. So let me just check in construction. 31 December 23, I think. 31 December, where is it? 31 December 23, 31 December 23. And the balance for the asset should be 2722,249. 2722,249. Yay, awesome. So we've got our current assets, and then we would have our current assets, of which current assets, maybe let me do this so that it's, yeah, current assets, we'll have our cash and equivalents, then we'll have our debtors, and yeah, for now we just simplify, we use those two. And then for this one will be the plug, or at least not the plug, but the truth teller of whether we've been delusional on something. I don't think so. I think we've been very diligent in our doing. So for debtors, we know we've got a formula. So we've got receivable days here. We should have receivable days at the start. Receivable days. Do we have receivable days? Oh, we don't have receivable days, so we have to create receivable days. That's okay. Let's just go to assumptions, and let's just create receivable days, and we'll have payable days, and maybe inventory days. And this is in days, so 30 days. Let's see what the days look like. So it'll be like that. So and days, enter. Then we just copy the magic formula and we paste it like that. But what I want is actually this, and I want the formula. But obviously I just need to make sure this is also blue so that we are not confused. Awesome, 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 awesome. And let me just paint that as well in that funny color. This is the wow. Oh, this is the color I used. Found it. Yes. So I've just put 30 days for receivables. We pay our payables, maybe we pay in 60 days, and then our inventory turns over in say, let me say 30 days and 45 days, exactly 45 days for receivables and 60 days for payables. Awesome. So if we go back to our financial statement, it means our payables have to be debtors rather. Debtors will be this value, receivable days, F4, divided by the year, or rather divided by the period, the days in this period, which is that. And then oh no, why am I locking? Then multiplied by the revenue. Yes, we've got our debtors. Yeah. So at the end of the month, we know that since our debtors are going to be paying back in 45 days, so it means that out of the 180 days, 45 divided by 85, what is that? So equals 45 divided by 180. Oh, what am I doing? Equal 45 divided by 180 days, so which means 25% of whatever, or at least 45 days out of this particular period, out of this half month, we won't have revenue worth 45 days in this. Yeah, that's why we just did the pro rata approach. Awesome. So we add these two. Oh yeah, we've got inventory as well. So inventory. So inventory. Yay. So inventory is the same thing. The only difference is, so we say inventory days. Where's the inventory days? There's the inventory days. F4 divided by the days in that particular period. But inventory is usually multiplied by the cost of sales, of which it's not all the things in the cost of sale. It's probably the gypsum, pozzolana, and clinker alone. Yes, which we have in inventory. Enter. Awesome. Oh, it's negative, so I have to change it to positive, because inventory, we can't have negative inventory. Something is a bit weird. Something is very strange. Oh, nothing is strange. Sorry. I'd looked at the difference between the inventory and the debtors, and then I realized that no, the difference is large because the debtors is based firstly, of course, on more days, but also on a larger value, which is the revenue, whereas the inventory is based on the cost of sales. So now I just need to change that formula so that it works beautiful. So now I'll have my total assets. Yippee. So I add these two and cross Alt HBU to just put the double border line below. So maybe let me make it a little more pretty, and I say assets, and then I move these. Nope, these are fine. Then I'll just say liabilities and equity. So liabilities and equity, so we say non-current liabilities. This one we already have a balance which we have to pick from here. Where is it? Funding, or closing balance. This is where we want to pick it up, and we'd like to match would like to match this end date. Where do we want to match it? We want to match it against these dates. And close it, enter, and that. Ooh, and if there's an error, I'd like it to do not of, and we just copy this across. And guys, don't be inefficient like the way I'm doing things in terms of copying the formatting. You should do a macro or something complicated to help you not copy the formatting. Yes, I'm just being too lazy, but yeah, that's what you should do. And then the current liabilities will have our trade creditors. In fact, let me call them payables, and these ones, let me call them receivables. Yes, trade receivables, baby, trade receivables, to be more accurate. Trade receivable, trade payables. So the trade payables, what are they? Again, we use the formula. Trade payables, where are they? There, payable days, F4, and divided by. So notice how I'm skipping back from, if you type A1 and you press F4, it jumps back to the source, and then I just delete A1. Yeah, that's what I was doing, lest you think I'm doing something complicated. So that's the number of payable days divided by the period, multiplied by the cost of sales. Yes, cost of sales. I didn't even need this sum. Enter. Oh, it's negative, so I have to just change it to a positive number. Yes, and then this would give us the total liabilities and the equity. So then we have equity. So we have an opening balance. Is this the best way to do equity? I think it's the best way to do equity. So opening balance, and then I'll add the investments, and then I will take out any dividends, and then I will have earnings. So add earnings, and then I will have a closing balance. So I know the opening balance will be whatever we closed with. So this, yes. And then the investment, I have to add it from the funding column. Where's the equity drawdown? This is the drawdown for period, but it's a cumulative amount. So which means I have to index, yes, no, is that correct? Equity funding. Yeah, let me just create a formula. In fact, I already have something which is taking the flag based on the reporting period. So I'll use the same logic which I used for interest payable, but the only difference is now I'm applying it to 5, and I just say equity draw down summary, and then so I've just copied the formula which I was using to pick the interest payable. I just copied those contents and I pasted them here. The only difference is this will not be picking from that, it will be picking from that drawdown for the period, and I just add them there. Beautiful. And I can see the numbers have come in. The numbers are in. Yay, they're coming in aggressively. So this 2.9 should add these 2.9. Beautiful. So now it means here I can actually just search for investments and say index. I would like the investments in this column, and I'd like to match them. notice we use match a lot, and I'd like to check that date. Where would I like to check it? I'd like to check it amongst these dates, F4, and enter. Beautiful. So now I've got all the investments. Yes. And then dividends, for now we just put a 0, and then earnings, we've just calculated them here, earnings after tax, these ones. And then the sum of these would be, I see something, I need to just handle for an error. If there is an error, I would like you to put a 0, and beautiful. So now if I just take this formatting and I just paste it across, yes, and I'll just put a border, at the top, so that's, the equity is there now. So now I can have my equity and liabilities, which should be the sum of this and that, and I just put a border on the top and the bottom, and then we'll check whether there is a difference here. So this, we check whether we have a difference in these, or in this row, where we're just checking this minus that, and so clearly we have a massive, our balance sheet is not balancing. That's bad. So the cash flow statement will help us clean that up. So the last thing is here, cash flow statement. So cash flow statement, we have cash from operating activities, and then we have cash from investing activities, then we have cash from financing activities. So under the operating activities, the first thing is obviously we take our EBITDA, earnings, EBITDA, yes, the one just before depreciation, so that we don't need to add back depreciation. So what was the EBITDA? Let's see, where is EBITDA? Is basically what's the cash profit that we had before paying tax, and then I'll add changes in receivables and changes in inventory and changes in payables. So receivables, whenever we've got more receivables this period compared to the previous, it means we lost money. So which means this period, what we had last month minus what we now have this month, if it's positive, it means people paid us back, meaning that if the balance last month is more than the balance this month, it's less than the balance this, if the balance last month was say 100,000, but then this month it's 50,000, it means people paid us, which means if we take this minus this, we've got an inflow of 50,000. Check. Next, if inventory, is the same logic, that if we had inventory of 100,000 last month and we've got interest of 50,000 this month, people paid us. Check. But for payables, if we have more money this month compared to last month, it means we owe someone money, which is good because it's cash into our business. I don't know whether it's good or not, but yes. And then I just put a border on top. I think we should have covered the cash from operating activities. And then cash from investing activities, we would like the cash from investing activities. So we say purchase of assets. And what do? We just take, if we have more assets, if anytime we've got more assets this month compared to last month, it means we've bought stuff, so it's bad for cash. Meaning, if I take whatever difference is between these two. We spent 5.8 million between the previous period and the current period. Yes. Then so that should be fine for now. And then yeah, financing activities, we just say how much debt investments / repayments, and then equity investments / repayments as well, or dividends in the case of equity. In fact, you know what, maybe let me put dividends separately, and then I say dividends. Yeah, so debt, what's the balance? Again, if we have more money borrowed compared to the previous period, we are in a win. So this minus that, so we've got cash coming in. And then the equity as well, where's the equity? These investments, and the dividend should account for those dividends. Yes. So if I add these as well, now we've got a total which came from financing activities. So now this gives us a cash movement for period, of which if we have an opening balance, opening balance and a closing balance. So opening balance would always be whatever the previous closing balance was, but the closing balance would be the opening plus the movement, of which the movement is a function of whatever happened in cash from operating activities plus investing activities plus financing. Yay! Awesome. Okay, awesome. So now I take this closing balance. This closing balance should have double borders, and this closing balance should be our cash and equivalents here. So equal our cash and cash equivalent is coming from there. Awesome. So let me go back and just copy it across so that we can, yes. So now you can see we've got in the first period. Okay, let me just make the formatting consistent. So now the cash is there. However, clearly something is wrong. You can see we've got this 1.9. So the first thing is just to see whenever your balance sheet is not balancing, the process which I usually do is firstly just to check whether the balance is being caused by one thing, which is recurring, and then I copy it across. And then the next thing, so I can see the number is changing over time. So it's probably not being caused by one thing, or is it? I'm not sure. So the next thing is then to look for this number, this 1176, into the numbers that you already have to see what could be the source of the problem. And I can't find a 1176. And because we hadn't started operations here, I know one thing. We haven't started operations, so the problem has to be in the other stuff. And immediately, obviously, my problem is here. I haven't copied the cash and cash equivalents formula across. What an easy problem to fix. So now we fix the first one. Now the second one, we've got this 900,000. Where is it coming from? Again, same thing. What's the difference between these two? And in seeing this difference, we just look for 900k and 19. 900k and 19. I'm not sure where it's stemming from, so we just have to now go a little deeper, and so to investigate, usually what I do is I look at the movement of each of the items, because usually the beauty of this is whenever there is a movement in each of the line items, then we are able to actually, we should have accounted for it in the cash flow statement. So we just start from the top, non-current assets. So they are supposed to have moved by 5.56 million. Ooh, before I go far, you see this number? Wait. Oh yes, so 5.56. Oh, I already see something. So the assets looks like they're increasing, but in reality they're not increasing. In reality they're actually reducing. This is actually the depreciation. So meaning when I say purchase of assets, I have to remove the effect of the depreciation, which is, where is it? There is the depreciation. Yes, so if I do that, let's see. Yes, so now 0, 0, 0, 0, 0. There is no purchase of assets beyond that, and the sum of these should just be equal to the sum of the assets. Great. So I've corrected something which was in the purchase of assets. Usually depreciation is a main culprit when things don't balance very fast. So now we've got a problem of 624,000. Again, let's just look to see, is there somewhere where we get 624,000, 642, 624,000, 624,000. Oh yeah, and sometimes you might need to, when you see a number like this, 624,000, sometimes if you divide it by 2, you might get an error in. So if you divide it by 2 or multiply it by 2, you sometimes get a number which you would have, instead of taking an upward movement, you would have taken a downward movement. So yeah, and this is just quick and dirty, where we're saying, can we quickly get a number like that? But yeah, in this case I can't see anything close, so I don't bother to fix it that way. So now I've got to go back to the painstaking work of just checking all the items to see whatever I not captured. So this, I know the difference should also exclude the depreciation portion. So 5432 is what I'm expecting here, 5432. So the non-current assets are fine. Then the receivables, so I should have an outflow of 2299, which is coming to these two, outflow of 229, and then an inflow of 1.5, which should be on the payables there, 1.5. So my problem is here, or is it? Or it could be in the non-current liabilities. Let's see, the non-current liabilities, I'm supposed to have a further 4.7 million, and I have a further 4.7 million, and then the equity investments, I have 1.76. Oh, I can see the error I did, this one. So you can see this error is because everything else is fine except for here. Notice how the earnings which are being accounted for is 585, but yet the ones which EBIT, which I'm counting for, is that much. So the reason is because there is a portion which I have excluded post the EBITDA, and besides obviously it's actually specifically the tax and the interest. So this interest and the tax, crazy, how can we exclude those things? So we say interest, and then we'll say tax. So interest, we just pick it from the top. Where's the interest? this was the interest, and then the tax, we'll pick it from the top as well, this one. So these two, if we take them across, amazing, look, balance sheet is balanced, our balance sheet is balanced. I'll be doing the happy dance if people are not sleeping, but yeah. So now our balance sheet is balanced, which is really cool. Awesome. So now we've got a balanced balance sheet, and we have seen how to double check rather what might be causing our balance sheet not to balance, how to fix it, and everything. Amazing, amazing, amazing. So awesome. So the next thing that we're gonna do is something very simple. I'm gonna duplicate this, and we are going to create the years, where we say the first year, the second year, where we just summarize based on the years, and the starting date, this part won't change. So yeah, let me just duplicate this. This should take us a very short time. So I'll call this 6 and maybe annual fin statements, and then I remove this, and maybe the other ones. Let me just drag this across. This should be here, and maybe this should be semi-annual financial statements. Beautiful. So here, of course, these titles are so wrong. Annual, yeah, but that's a nice problem to fix, so let me not waste time on it. So here, the start date would take from the timing. Where's the timing? Timing, and we want the annual. And yeah, so now if I take these across, now I've got my years. So here's the crazy part, because I've got, how many years do we have? We've got 20 years, so which means anything after 2041 should not really be relevant. All this stuff is not really relevant, is it? Or maybe let me use something 43 or 44. Just remove this stuff. It's not relevant. Control 9 to hide. Control 9. No, Control 0 to hide those columns. Awesome. So now what we'll do, because we want the same information, but the only difference is it's for years, and you can see it's picking from different. So a lot of this is useless, but we delete it. We will delete it and delete. And depreciation again. I'm just deleting all these things we don't need, and because they are based on annual, semi-annual, of which we just need to have something which is based on annuals, not semi-annual. So everything is now zeroized. Awesome. So now to take the bulk, what we can do is we can index, but index is not as cool as this formula which I'm about to show you of offsets. So because the starting periods are the same, so we can actually use offset, and I say I want the sum, and what's the range I want? I want to offset. I want you to start this way. We'll do one formula and we'll be able to copy it. I want you to start here, and I will, yeah, I'll lock the starting position. I'll lock the column, not the row. So if I move down, it just remains, it just starts in the same column, but it will move down. So I want you to start there. How many rows do I want you to pick? Or rather, how many columns do I want you to move? here, that's where it gets interesting, because it's in twos, it's in semi-annuals, this is an annual. So the columns, I want it to move twice, number 2. And then the height, I don't want you to go up, but the width, in fact, this twice should also be a function of the particular year of which we've got a period count. So multiplied by, open brackets, whatever the current period is, minus 1. So the minus 1 bit helps that in the first period it won't move, it will start in the first period, but it will take 2. Under the width, it will take 2. So what it means is that it will go to the particular, it starts at that particular column. Where is it? So it starts here, and then it's gonna take 2 items multiplied by 2. So this is the width rather. And then in the next period, it will multiply by the particular period, so it will start here. And then it will take 2. And then it will start here. And then it will take 2. Let's just see if that's actually working. So we get 9.3 this much. So if I go back, if I add these 2, do I get 9.3? 9.366, yes. And if I add these 2, I get 18,440. So which means if I go there, I get 18,440, and then I just copy it across. So I know it's working. And then I just copy it across, and oh, I realized something. When I copied it down, notice it turned to 0 is because I didn't lock this number. So where's it? This number, I should lock it so that the row doesn't change. And then I just paste it. Beautiful. And I just paste it across, and beautiful, awesome. And again, same thing. Interest, same thing. So what I'm doing, let me just explain. I'm just highlighting what I want. I copy it, then I go and I say Control V. As soon as I paste, there's this little thing that comes up. If I press Control again and I press F, it will only paste the formula, which is exactly what we want. Exactly what we want. And again, copy this on the taxation and paste the formula. Yes, so this is not relevant here. Awesome. For the particular, but for the balance sheet now is different, because for the balance sheet is at a particular point in time. So meaning we could take the same formula, this offset, and paste it, but now instead of giving us a sum, instead of giving us a width, we just want to take the width to 0 and enter. So we take 41. Then we just because if we change the width to 0, then it means that it will just take what's in that particular. It doesn't need to expand. Or in the case of the income statement, it's cumulative, so which means we need it to expand. But balance sheet is a snapshot. Now, does this formula work? Let's go to say 2026, June 2026. We should have total assets of 23,971. June 26, where's 26? There's June 26, and then we go to the assets, and we've got the 40 So if we go back, let's see. Oh yes, actually is because I didn't fill in the non-current assets, but 23,971, is that consistent? 23. Oh, so I see something. Actually, it's taking this period, 23,971,791. That's why you should always check 23,971. Oh, and I know why. It's because here I have -1. Let's see. Is that truthful or I'm lying? No. Let's see. because it's going this many columns. If I say +1, let's see, what number am I supposed to get in June 2026? June 2026, I'm supposed to get 27142. Oh, 27142. So when I added a 1, it worked. Why did I add a 1? What is the logic to the madness? Oh, it makes sense because I have said in the first, yes, actually this makes a lot of sense. Let me explain. So in the first period here, I was saying 2 multiplied by, because it's saying how many columns should I move from whenever I am in the equivalent column of cash and equivalent in this sheet. So it's starting there. So I'm saying take 2 multiplied by the number of periods minus 1. So when I'm doing cumulative, it works because it starts on 0 and then it will just take 2, because remember on width I had 2. But in this case I want a particular period. So if I say 2 minus 2, I'll get a 0. But I want the first occurrence because I don't have a height, because it assumes that the width rather is 0. So I have to add 1 so that I can just control for that first period. But it now comes into effect all the time. Whenever I move 2 periods, I have to add 1. I guess this is one of those things where you have to do by yourself and see what's happening. And yeah, it'll be easier to understand. Let's see now. If I go in June 2030, I've got 56393. June 2030, I've got 56396. Beautiful. So it is working. It is working. And I just take the same formula and I paste it here, and I paste it here, and I paste it here, and I paste it across. Beautiful. And oh yes, now it's different for investments. Investments are slightly different because they're cumulative. Because the way I've done it, I've had an opening and then I add investments, less dividends, earnings, and then to get the closing. So for those, especially for investment and dividends, I've got to use the same formula which I used to add the cumulative stuff. So add that and add that. So if I take these two, awesome. Ooh, my balance sheet is saying, my friend, things are not working. It's because this cash flow balance. No, it's not because of that. Oh, it's because I didn't fix the non-current assets across non-current assets. So now you can tell that something is a bit off here, but it's easy to fix because since we are taking from a particular point in time, then we can actually just go and compare each line entry. So if I go into the financial statements and I go to 2023 December, I expect the total assets to be 31,031. The total assets in 2023 were not, the current assets were 7957. Oh, which year period was that? This is in June 2023. So in June 2023, so yeah, the total asset is 7.95, and the total current assets 79, current assets is 79, and the total assets is 29,232 and 29. So maybe the problem is at the bottom. Total liabilities is 2807. Total liability is 2807, and then assets is 9253. Let's see. Ooh, the assets is where the problemo is. What could be the problemo? So let's see. So if I go to annual, let me just put 2023 as the first column so that it's easy to compare. 2023 is the first column. Yes, 2023 is the first column. So the opening balance is off, and then the investment. So now maybe let me start from the beginning. Let us start from the beginning, at least to just see. So I've got these two amounts which are coming in, 6223 and 6228, rather 6228. Those are fine. And then earnings. Oh, so earnings is where my problem is, or is it? Because yeah, earnings is supposed to be 2196, but in this example I've got 3. So something is wrong here. Something is wrong here, which is the period at the top. So if I add these two, I'm supposed to get a profit of 2196 in that period, but I'm getting a profit of what? 3. So the tax, let me just check the EBITDA is, how much is EBITDA? 5056. So EBITDA is fine. The stuff goes wonky for me here. Oh, there's no depreciation. How silly of me. Silly. Paste that. Then I just run that across. Yes, everything should make sense now. Yay, everything makes sense. So guys, ladies and gentlemen, you have literally just created a full financial model. You have added a summary of the financials. You've summarized them annually. So now usually what I like to do is just create a separate file where I just reference all the values come from this, but I won't have these columns and I won't have a lot of these rows. So this makes it easier for presentation and printing, so it won't look bulky. But for ease of navigation and consistency, I just created it in the same format. So yeah, that is the main thing. Awesome. I think obviously I know that the only thing that we haven't done according to our lesson schedule is the analysis, but we've done a 3-part financial statement, and then we summarize the model, which is massive. I think the analysis I'll do as a separate class so that this doesn't become too long, but I won't even do it as part of this class. I'll just do it as a separate standalone course, but I'll do that I guess when I get time. Let me see if I can sleep now. And yeah, thank you for the patience, and hopefully this has been worth your time.